Hello, everyone. Welcome to the final bar. Today, my guest is Bruce Power, CMT. Bruce is an independent trader, knows charts as well as anyone. So interested to hear his take on a key group within healthcare that I think you're going to want to pay attention to. Today, Gamestop continuing to go vertical, but it's not just about the GameStops of the world. Overall, the market really in wait and see mode. We've got the Fed. We've got a lot of earnings this week, sort of choppy yesterday into today. What's next? Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to today's edition of The Final Bar. I'm your host, Dave Keller, the Chief Market Strategist here at StockCharts.com in a cloudy but rain-free Redmond, Washington. Thanks for joining us every weekday after the close as we break down these markets using technical analysis, using charts. I was interviewed earlier today for Barron's, and we were talking about price behavior, and I was trying to explain the benefits of visualizing market activity, right? You don't have to be afraid of or concerned with what is causing prices to move necessarily. I will tell you, as a holistic, as a well-informed investor, it behooves you to understand the relationship between the technicals, the charts, and the fundamentals, the news and earnings and other quantitative things that tend to change a valuation for a company. But at the end of the day, focusing on price action, focusing on the collective buy and sell decisions of millions and millions of investors is arguably the best thing you can do to understand where the trends are and anticipate where the trends may be headed. Now, we have some wonderful guests on the show, and I'm super thankful with the quality of commentator and expertise that we have coming through the show. We have Bruce Powers today. I'm excited to hear his take on the markets. Tomorrow, we have Julius de Kempener from RRG Research joining us from Amsterdam. He knows sector rotation better than anyone. I'd be interested to hear his take on the rotation essentially away from value into growth. Next week on Tuesday the 2nd, we have Tony Zhang joining the show for the first time. Tony's an options expert. Be interested to hear his take, especially given the rise in interest in the options market. And then Louis Llanes, my friend, joining us from New York on Wednesday the 3rd. Louis is one of my favorite quantitative strategists. He knows the numbers behind the stocks as well as anyone. So some fantastic guests coming through the show in the next week. Let's get into our market recap. I did want to start with a poll. As you probably know, we have a poll running all the time on our TV page, also on YouTube and on Twitter we do as well. This question was more of a knowledge question. Know your candle patterns in a downtrend. A long down candle is followed by a long up candle that closes about 75% of the way back up the first candle's real body. Which pattern is this? And we asked you, doji, bullish engulfing pattern, bearish engulfing pattern, or bullish piercing line. 55% of you answered correctly. I almost stumped Final Bar Nation with this one, but overall, you guys did well. It is in fact a bullish piercing line pattern. 26% of you I tricked you with who said bullish engulfing pattern. That would actually be if the second day eclipses the first day's open. So it's not just it goes into the real body. It has to actually go above the previous day's real body. So that's where the second day engulfs the first day. So they're very similar, and they have a similar outcome or a similar conclusion, which is more of a reversal pattern. Those are both bullish reversal patterns after a stock has sold off. But the one I asked in particular, 75% of the way up is a bullish piercing line. Names of the patterns I'm often less concerned with. I'd be more interested in you understanding the mechanics behind it and what it tells you about the psychology underlying or the sentiment underlying the price movements. But that is the correct answer. Let's get on to our market recap. But as I mentioned, by many ways, this is sort of another digestion day. We've had a number of these recently because, you have a bunch of potential catalysts this week. We have Microsoft reporting earnings sort of as we're recording this right after the close. It's coming up a little later. The call, I think, is at 5:30 Eastern. So, certainly by the time we run the show, could have some movement after hours in Microsoft. But that's the first of 3 FANG stocks we have reporting this week. Stocks like Apple, like Facebook, these are companies reporting. And so, I think the FANG stocks have a potential to be big catalysts, but we have to wait and see what comes out of there. Also, the Fed in the middle of meeting right now. So we'll get some comments tomorrow after that meeting. So certainly some potential catalysts going into the latter half of the week. For now, today was sort of wait and see mode. We chopped around the zero level. There are plenty of stocks moving to the upside and moving to the downside, and we'll try to highlight as many of those as we can. Catching up on the markets, though, the only of the major averages on the upside, actually there are a couple. The NASDAQ 100 flat to positive, small caps and the S&P 100 all just above zero, but on the for the most part, it was essentially flat for the day. Looking at other asset classes, bonds also sort of chopping around. We've talked about this potential rotation from rising rates to falling rates, which would be a bit of a change. See if the bond prices could appreciate a little bit. Sort of flat today, chopping around, continuing yesterday's choppy session as well. Precious metals mixed as well. So gold down a little bit, silver up a little bit, but overall not a huge move one way or the other. Even cryptocurrencies are sort of in wait and see mode. We had a lot of fluctuations and overall on net down, but overall chopping around a little bit. So here's what a chart of the S&P is looking like. We've talked about this trend line using the lows. And again, as I've told you, I'm not a huge fan of trend lines as a trading system. For me, trend lines are more about a way to visually quantify what you're seeing on the chart. And I will use other things like moving averages, support and resistance levels, Fibonacci retracements as actually actionable trading signals. But for me, a trend line is as good as any to track the trajectory of a trend. What that trend line does is it basically says, this is what the S&P has been doing for the last almost 3 months now. If we accelerate further away from that trend line, just like if we accelerated further away from the moving average, that tells you that the uptrend is accelerating. It tells you the trend is going parabolic, it's going vertical. A lot of times that can be right at the end of a move as you have that last gasp higher. If we break down through the trend line, that would tell you a potential change of character as well, because it tells you the trend has had a certain pace, and all of a sudden that may be changing, and you have to look at support levels and see if it's able to remain above previous swing lows. If it just keeps going up and continuing on the trend line, that tells you that it's sort of slow and steady, long and strong up and to the right. And at this point, that's what we've continued to see. And with trend lines, I've often told people once is chance, twice is coincidence, 3 times as a pattern. So now that we have a trend line connecting 2 points that connects independently with a third point and now a fourth point, the Edwards and McGee, sort of the Bible of technical analysis, would tell you every time we test the trend line and bounce off of it, that further validates that as a correct measure of the trend. And so we continue to confirm that. I think as long as we remain above that, the trend is in decent shape. If and when we break below that trend line, I'll be the first to tell you we need to be a little wary of further upside. Looking at some sector themes today, communications services number 1, followed by real estate, followed by consumer staples. And consumer staples are an interesting one. You have stocks like Kroger and Clorox and names like that. Albertsons just accelerating to the upside. This has a lot to do with the options dynamics that we're seeing in stocks like GameStop. And we'll talk a little bit. There's a question we got about that in our mailbag segment. So I'll address a little bit more GameStop in particular and what that might mean. But overall, staples appearing toward the top of the list. On the downside, you have energy, materials, industrials, financials, utilities. And utilities were actually number 1 yesterday. So a bit of a reversal there. But if you look here, this is not a clear offense is working, defense is not, or defense is working, offense is not. It's sort of a mixed bag. You've got a bunch of things on the upside, a bunch of things on the downside. I don't know if I would necessarily give a clear sector rotation answer based on what I'm seeing on a day like today. In terms of movements that we're seeing elsewhere, I would just point out that on the industry side, you have renewable energy equipment. This has been a frequent stander in at the top of the list here. This is all the solar stocks, the mid-cap stocks like Plug Power, which has been the number 1 ranked mid-cap stock in our scooter ranking, has continued to go higher. All of those names here. This is PLUG, which is again the top ranked mid-cap scooter stock. Up pretty good. What else would be in here? Like solar names like First Solar, which really didn't move a ton. Maybe TAN might be a better. Nope. See, yeah, the solar stock's really down. It's really sort of a smaller subset within that group of renewable energy equipment that's actually doing pretty well today. But that is the number one group. Fixed line telecom is actually a relatively boring group. That's sort of the Verizon's group. That's and I say it's a boring group because it's like AT&T, Verizon, and others are in fixed telecommunications. That's the third group from the top. On the downside, you have things like a lot of materials, non-ferrous metals, aluminum stocks, steel stocks, railroads, defense. These are things that concern me a little bit just in terms of infrastructure plays. So things like, let's see what would be in here, like CSX would be in that railroads group. What's interesting about these charts from a technical perspective, these are all charts that broke out at the beginning of the year. And then from there it's a failed breakout. And a failed breakout for me is something that breaks out to the upside, breaks above previous resistance. You think this has a lot more to go, and then it fails. It doesn't continue through, it doesn't really follow through, and it breaks down through an intermediate support level, which is what CSX has now done. It tried to bounce off of it yesterday and now following through to the downside. So these have very quickly gone from, emerging leadership names, names working, starting to improve, going to new highs, all of a sudden making new swing lows. And that's a concerning pattern if you have breakout stocks that actually are breaking down soon after. So an interesting group to watch. And I keep an eye on some of those railroad names like UNP and others in that same group. We need to take a quick commercial break. We'll be back with Bruce Powers in just a moment. See you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. Such a pleasure to have you join us every weekday after the close as we break down the action in the markets from the lenses or using the lenses of technical analysis and behavioral finance. As a reminder, we're going to do another mailbag segment later in today's show. We would love to answer one of your questions in our next mailbag, which will be at the end of the week on Friday. Shoot us an email with any questions that come up as you're analyzing charts. So the Final Bar at StockCharts.com is our email. On Twitter at FinalBarSCTV, just tag us in a comment, or on our YouTube channel, just put a comment below the video that you're watching. We'll take all of those questions and hope to answer one of your questions on our next mailbag segment on Friday. I want to welcome on our guest back to the show, Bruce Powers. Bruce is a fellow CMT. I've known him and his work for a number of years. He's an independent trader. And Bruce, great to have your perspective on the markets right now in a fairly uncertain time. Good to have you on the show.
Yes, David, good to be back. How are you doing?
I'm well, no complaints. There's no shortage of charts. I feel like sometimes you can struggle at times to find charts to talk about. I don't feel like we're in that environment. And you've brought a couple really good, I think, top of mind ideas, starting with a group within healthcare that I think a lot of people are starting to recognize because of the breakout, biotech. Why don't you start there and tell us what you're seeing?
Yeah, so what I started to do was just look around the market last night and see where there might be opportunity and what might draw my attention to certain opportunities. So I saw this biotech, the biotech ETF, and it was breaking out to new highs. So I looked through the biotech stocks to look for some type of setup that I'm familiar with or I've seen before. And when I did that, most of them did not show anything that interested for what I was looking at, which would basically be a 1 day to 2 week time horizon. But I did find this one Biogen who recently has been consolidating, which you can see from the inside week that is there from last week. And so I would be looking for a potential breakout of that consolidation if it goes above last week's high, which would also be a breakout above the 50 simple moving average and a further confirmation of the breakout of the trend line, although this trend line is not extremely significant because we got it cut off earlier. And like you said earlier, which I would agree, trend lines give you some context and not much else. But so that's why I like the inside candle there. And then if we go to, and so what we're looking for there is a measured move where the first leg up, starting from the beginning of the year, approximately potentially matches the second leg up. And you can see here how on the daily we pulled back to the 12-period moving average support and the 38.2% Fibonacci support approximately. So that's a way to possibly get in even earlier, anticipating this move, where we could use the inside bar from 2 days ago or even above yesterday's high as a possible, or the day before, I think it was. And then we have a couple key targets up there around 310 or so, which is some Fibonacci confluence, which is looking at both the retracement of the prior big downtrend and a projection of the first leg up or the completion of a measured move, which would be at 311.87. However, sometimes these things keep going, and in that case, I'd be looking up at the 78%, roughly somewhere between the 127% extension, $323 up to $333 approximately. So there's two ways to look at this: a little more aggressive using the daily, a little more conservative using the weekly.
And when you're looking at, I mean, these are great charts, Bruce, and I like the setup that you're highlighting. I'm curious, when you're looking at a stock like Biogen, what would tell you that things are not playing out correctly? How would you think about the risk side of this? I mean, would it be a reversion below, the moving average that you have on the daily chart, or how would you sort of approach this high level?
Well, I mean, for sure it would be below last week's low, for sure. But that's probably, I haven't measured it, but that's probably too much. So I would look for something on one of the bars where we have another day or two up before that breakout triggers. So maybe I'd go 2 bars back, for example. But for sure, depending on how much room I want, I don't usually like to give it. I like to cut down on the risk as much as possible. So I'd probably look at it that way. But I'd calculate it to see what that low there would be. But the intent of the setup is that when it breaks out, it should take off. And if it's not taking off, the quality of the trade diminishes the longer it takes to do that. So I don't feel like I need to give it all the way back to the low of the week.
Okay, that makes sense. Now, the next set of charts really to finish up is focusing on the US dollar, which obviously has implications for a lot of different things: small caps, non-US stocks versus US, and a lot of people are just pretty comfortable with the declining dollar, with a weakening dollar. What are you seeing?
Yeah, and then we also have, you mentioned crypto and Bitcoin particularly. I think that if the dollar rises, we could see further declines in Bitcoin, for example. So what we have here is, this is the daily chart, and obviously it's been trending down for a number of months here. And we have a potential head and shoulders bottom trend reversal pattern here. With the right shoulder and the left shoulder and the head marked on the chart. And then we also have a recent break above the 20-period moving average. And importantly, you can see how that moving average previously was resistance on the way down, but now that we're above it, we've tested it 1, 2, 3, 4 days, and each day it is held. So that is a minor kind of bullish behavior, but it's certainly doing what I would want to see if it has the potential to go higher. That doesn't mean the right shoulder won't be lower before it's done, though. Maybe that right shoulder is not complete. We won't know yet until it breaks out. So we're looking for a breakout above the neckline of that recent high there for a signal that there's a further bounce. However, in the bigger picture, in the longer term, we're still in a downtrend. So this is a bounce within a downtrend. A tradable rally, I believe.
Interesting.
Now, the other way,
there would be a bit of a contrary move to what we've seen up until now. Bruce, it's so great to have you on. Thanks for walking through these charts with us, and hope you and those around you stay safe. All right.
Thanks, David.
That's Bruce Powers. Bruce is a fellow CMT. I've known Bruce for a number of years, and have enjoyed having an ongoing conversation about the markets. And I love that take on a stock like Biogen. And if you think about what he described, which I really appreciate, he saw a group that was doing well, biotechs breaking to new highs, the IBB in pretty good shape. And the question is, what's actionable, right? What do you do about that? And instead of just saying, I'm going to buy the ETF and that's it, it was, let me look for an individual stock or some groups within that space that might actually have a good setup. And I think there's a lot of wisdom in that. It reminds me a lot of Gaddis Rose, one of our contributors, who talks about, what's working and looking at the relative performance and then thinking about what lever you're going to pull to actually make a bet, right? To express your opinion on what's happening with that group. So if you listen to his, the way he described it, I think there was a lot of wisdom in how he went and set up that potential trade in Biogen. We need to continue on with the final bar mailbag. This is where we answer your questions that have come up. And again, I hope you think of us here at StockCharts as a resource for you as you go about your process of analyzing charts. You go through the process of investing, of trading, thinking about how you're positioning. Let us help you answer questions about the markets, about market dynamics, about how to approach things more effectively. Question number one, boy, this is a long question, so I'm going to summarize. Let's see. Recently, Mary Ellen McGonigal, she hosts MemEdge, highlighted 3 stocks that were taken to the woodshed that have found new life, and price crossed up through the 21-day and 50-day moving averages from below and then made great subsequent moves. In particular, highlighted Amgen, Gilead, Regeneron. Actually, very interestingly, in the biotech space that we were just talking about with Bruce Powers, would be great if there's a scan that could find these stocks breaking back up from low levels. Really, really good question. I will tell you, the scanning engine is such a powerful tool, and it requires you to, think about what you are trying to accomplish. And I always tell people, if they're trying to think about how to scan for ideas, I think you're doing a great job, which is look at a chart that you want to figure out, right? Look at a chart, bring up an example of a stock and where you would have wanted to screen for it. And then look at the conditions that are around that moment, right? What would you want the chart to look like when it comes out of your scan? And then think of the technical conditions that would define that or would characterize that move. And that's what you want to scan for. That's how you should generally think of it. So if you bring up the scanning engine, I'm going to create a new scan here. Here's what I do. We don't have time, unfortunately, to go and build this scan in particular, in all detail. But I would tell you, if you're looking for things like price movements, if you're looking for things like breaking moving averages, it's actually pretty easy to do, relatively speaking, because all you need to do is bring in the right components and then express that effectively. The way that I would encourage you to do it is at the bottom. Here's your scan engine, and if you're a programmer, you could probably start typing this from scratch using our coding system. I am not a programmer, and I'm assuming based on the fact that you asked, you probably are not either. So here's what's really cool. At the bottom, just below the scan, there's a whole section of things. And what happens is if you see the predefined scans and you say new 52-week high and you click add, what that does is it basically adds the code to the top that explains how you would do that. If you want to search for stocks making new 52-week highs, the command is today's high greater than yesterday's daily max, and in parentheses, 253 high. So basically says, I want today's high higher than the last 253 maximum high value, right? So it's a new daily high. Using that, you can change anything in green, in purple, in orange are all things you can change. And it uses pretty much, just regular English to explain and express those different things. You could change high to close or high to low. You could change today's to yesterday's. You can say daily to weekly, and all of it's going to remember it, or it's going to understand what you're doing. And as long as you stick with that general syntax, you're going to be fine. So the way you could do it is basically say, I want something that has been in a downtrend. So you could say something like a moving average has been in a downtrend. You could say that the low has been lower than previous lows, or something like that. And that's how you would define the trend. For something like breaking a moving average, there is this one called a bullish 5,200 day cross. That'll show you the syntax, and it's literally just saying today's 50-day moving average is greater than today's 200-day, and yesterday it was below, which means just in the last day, we've seen a positive breakout. So using those sorts of commands, you can easily create the scan you're looking for. For you particularly to ask that question, I'll email you back with a suggestion of what that scan would be. I'll literally give you the text. You can copy and paste it into the scanning engine. But those are the types of things I would use to express the scans that you're doing. And the good news is, number one, you can create a scan that does pretty close to exactly what you're asking for. The second thing I will tell you is this scanning engine is top of mind for us as we're thinking of 2021 and things we want to work on redesigning. The scan engine is certainly on the list, and we'll be looking for feedback from you and others on how to do that better. Question number two, Apple shows most promising setup of the cup and handle. Let's see, are we looking? Oh, if we break out of that cup and handle pattern, which we talked about earlier in the week, am I looking at 157? I want to know, in your experience, what's the percent of success rate on the cup and handle chart patterns? Interesting question. Let's bring up the chart of Apple. We were looking at Apple earlier in the week. We talked about this cup and handle pattern here, which was the rounded base and then a consistent resistance level, a shallower pullback here, and then a break to new swing highs. I call that a confirmed cup and handle pattern, which I think measures much further. So your question is, where do we go from here? So, in general, the way I would use a pattern, any sort of patterns, basically, it's traditional to take the height of the pattern. So if you take this high around just below 140 and you take the low just below 105, I would add 35 points to the breakout. And I think that gets you up to 175 would be the way I would measure that. Just sort of back of the envelope, sort of taking the height and projecting that further to the upside. That's how I would generally do it. What's the success rate of that? Boy, that's a question I can't really answer. One thing I've not done is back tested a lot of patterns. For me, it's more about the trend, and patterns are a way of expressing trend. I think what impresses me on the chart of Apple are the higher highs and the higher lows. And as long as the pullback lows keep getting higher, I think it's going to be a consistent uptrend. I don't have back-tested statistics to share with you. All I will tell you is that is a pattern that William O'Neill really popularized, the creator of Investors Business Daily, and it's a tried and true pattern with a lot of institutional investors. That's enough for me to want to go on with it. The next question: what do you do with a chart like GME that's moving so much for for non-technical reasons? And I'm summarizing your question. GME is a really fascinating experience right now, and we only have a minute, so I can't give you a lot of details. I was interviewed earlier today for a news outlet, media outlet, about this particular scenario, just talking about options and and what those bets mean. So here's the thing: I would tell you, yes, what you're seeing on a chart like GME, I think you're also seeing with things like Kroger and Clorox and Albertsons and all of these value names and others that are just moving, accelerating to the upside. You're seeing certainly a lot of options activity. You're seeing a lot of short squeezes or gamma squeezes. And what all that means is, if you think of a short squeeze, basically if you're short this stock and all of a sudden it starts going up a lot, you either have to cover your short, which causes demand, or you have to buy the underlying stock to manage your risk. And either of those things will cause additional buying pressure that will continue the price to go higher. And it's a feedback loop that continues to push the price higher. And the higher the price goes, more people are squeezed as their short position or their puts are more and more underwater. So it's a feedback mechanism that's been accelerated by social media, right? Accelerated by people communicating that to each other. So, are charts still valuable? Absolutely. And I will tell you, with something like this, when something is sort of in bubble mode, when it tends to go vertical, at some point, anyone who is benefiting from the upside in this stock decides they're done and decides they've made enough, and they decide to take profits and sell their position or close out their position. That immediately dries up the demand that has caused these prices to go higher. So I would argue it is absolutely a good time to look at the charts and think about where potential pullbacks would be, because if and when this goes down, people will immediately be looking left on the chart and identifying potential places where they would want to get back into it. And we've seen that with cryptocurrencies going from single digit thousands up to 42,000, and now in between on Bitcoin. We've seen that now with stocks and the option implications on something like GameStop. So certainly it is, in some ways, is it an artificial driver of price movements? Absolutely. But I would say this is the latest expression in speculation and, individual investors actively getting involved, and it's creating a feedback loop that is certainly causing stocks like GameStop to go much further to the upside than traditional fundamental valuations would have you believe. But keep an eye on the chart. That's all the time we have. I wish I could go in more. That might be a whole special we do, seeing how this all plays out. But we need to go the 3 and 3 charts in 3 minutes. Here we go. Chart number 1 is the daily chart of the S&P 500. And again, I'm keeping it simple here, but just as a reminder, that a trend line like this, while not a trading system for me, certainly speaks to the pace of the trend. And as long as we hold above that chart, hold above that trend line, I think we're in good shape. Trend lines for me are a visual cue. As long as we remain above the trend line, I don't have to worry about that chart. If and when we break down through that trend line, I need to be a little bit more concerned, which is why I'd be paying attention to it. Chart number 2 is Microsoft, MSFT, and this is a stock reporting earnings pretty much as we're recording the show after the close here on Tuesday. I think, a number of the FANG stocks reporting this week, 3 out of the 6 of the FanMag stocks that we've talked about. I think this week is going to be all about the potential catalysts of earnings and catalysts of the Fed. And looking at this chart and seeing if we break above September highs, if we follow through to the upside, I think will be very telling. So Wednesday, Thursday, and beyond will be very, very key. Chart number 3 is a chart of the TLT. And again, I'm looking at a trend line. I'm looking at the TLT bounce off of support around 150. And if it's able to hold 150, that tells you potentially about an upside reversal in bond prices, a downside movement in interest rates, which would be different than what we've seen in quite a while. Folks, that is our show for today. A special thank you to Bruce Powers joining us and giving us his latest thoughts. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.